Hey everybody, this is Travis Burton at the Kentucky Chamber. We're giving everyone just a moment to get signed in and logged in. We appreciate you taking the time to be here with us today. I think this is going to be immensely helpful. If you will, please just stand by and we will get started in just a few moments. And again, this is Travis Burton with the Kentucky Chamber. I am watching as our participants list continues to increase. So this means that people are still signing in. We're going to get started momentarily. If you will, just please hang on just a couple more minutes. So it's a couple minutes after 11, and it seems like our number is kind of becoming a little more steady. I'm watching the participants list as it grows to see if we still have an influx of people, but we still have a few people joining us, but we'll go ahead and get started. Again, my name is Travis Burton. I work here at the Kentucky Chamber of Commerce and help staff our Small Business Council. We're thrilled you could be here with us today, and we're grateful for our presenters taking a little bit of time to help walk us through the process of taking advantage of the CARES Act. As you know, last week, Congress and the President passed the CARES Act, and that legislation was pretty large and pretty significant. It, of course, is in response to the current pandemic, COVID-19 pandemic that we're all dealing with. And then I know our businesses out there are working hard to keep going and to keep the economy moving and to keep their doors open. And so that's why we are here today to hear from Diane Medley and Diane Kilner from Mount Joy Chilton Medley. And they have put together a presentation that will help break down some of the opportunities that have been created through the CARES Act to help businesses in this very difficult time. We did receive a number of questions when you signed up for this webinar, and after reviewing the questions, I think many of those will be answered during the presentation. For those that are not addressed, we've passed those along and we'll attempt to answer those at the end, time permitting. We'll also, I believe, enable our chat feature. So towards the end of the presentation, if there's any questions you want to ask there, we will attempt to get those answered as well. So with that, I'm going to hand things over to Diane Medley and Diane Kilner. Again, on behalf of the Chamber, thank you all for joining us today, and I'll hand things over to you.
Hello, everyone. This is Diane Medley. We're happy to be presenting this to you all today. Unfortunately, it's very difficult circumstances that we are all facing, and just hope everyone out there is staying healthy through this situation. MCM as a firm has clients. This is a picture of myself and Diane Kilner. It's a little funny. We got two Dianes on today. I'm the executive chairman of MCM, CPAs and Advisors, and Diane is the leader of our small business group. So we have been on point with this matter for the last week and a half, answering a lot of questions for people who are confused about the rules. There is not a ton of guidance, so we have to go back to the law itself in most cases, and the law was very hastily written to get this out there, so there's a lot of gaps. But we're going to attempt to give you our best thoughts on what the rules are. We've been talking to bankers across the state in the last few days, getting their input So we're going to give you everything that we can to help make this easier for you. As a firm, I think a lot of you will know us. We are throughout the state and also in Indiana and Cincinnati. But again, virtually every business and nonprofit is affected by this pandemic. Some much more than others, but all of us need to take the opportunity to take advantage of what Congress has passed, because this could be the difference in us being able to maintain our workforce, and when this is over, get them up to speed quickly. So this funding is very, very important. There are two basic loans that we're going to talk about. One is the Economic Injury Disaster Loan. We're going to call it EIDL for short. That loan was in place probably 2 or 3 weeks ago, and we're going to go into detail about who should start with that one. Maybe some of you already have. We'll also talk about, can you combine it with this next loan? The next loan is called the SBA 7A, and also known as the Paycheck Protection Loan. So there's a lot of intricacy about, do you do both? Do you do one? What information do you need for each of these? And hopefully by the end of this session, you'll have the information you need to go forth and apply for these loans. I'm now going to turn this over to my partner, Diane Kilner, and she's going to go through the detailed rules on the SBA 7A program. This has been updated as of last night, so hopefully it's the latest and greatest.
Good morning, this is Diane Kilner. First, who is eligible? Small businesses, generally defined as less than 500 employees. This is not the normal definition of the typical SBA loans. This has been adjusted for this particular purpose. It also includes sole proprietors, independent contractors, self-employed individuals, as defined in Congress's last COVID-19 bill, the Families First Act. Nonprofit organizations, meaning 501c3s only, veteran organizations, hospitality and dining industries special eligibility rule. Hospitality and dining businesses are eligible to receive a loan if the business has more than one physical location, employs less than 500 employees per location, and is assigned the Accommodation and Food Services Sector 72 under the NAICS system. This is a very particular rule due to the number of franchise type businesses typically that may normally have over 500 employees. But in this case, in this particular case, a lot of these restaurants will have under 500 per location. So it allows them to be included, which is not normal for an SBA loan. How much can be borrowed? There's a calculation that we have to look at when calculating that cost. You're going to take your average monthly payroll for the 1 year period ending on the date the loan was made. We're looking at that for the most part, meaning April 1st of 2019 through March 31st of 2020. We'll go through the actual calculation of what is included in payroll costs in a minute. And then that number is multiplied by 2.5. We also have to take into account if you've taken any money out of the Emergency Injury Disaster Loan, the EIDL loan, between January 31st, 2020 and the date of the loan. You have that calculation compared to the maximum amount of $10 million. What are the requirements for use of funds? The loan is needed to continue operations during the COVID-19 emergency. That is the main purpose of why you're going to say you need this loan. Everyone has been affected in some way by this, whether indirectly or directly. It could be customers, it could be suppliers, it could be employees. So that's where they're looking at just about everybody can be included because you've been affected in some manner, and you have to certify that on the application. But the funds will be used to retain your workers and maintain payroll, or make mortgage or rent payments, lease payments for your property, and utility payments. The applicant does not have to have any other application the applicant does not have any other application pending under this program for the same purpose. So if you're applying for both loans, you cannot have the same payroll included in the EIDL loan and this payroll protection loan at the same time. So that's the main thing when you're looking at the two loans together. Also, February 15th until December 31st, that's the time period that the applicant cannot receive duplicate amounts under the two programs. What is included in payroll cost? Wages, commission, salary, or similar compensation to an employee. Compensation of a sole proprietor or independent contractor that is self-employment income. Payment of a cash tip or equivalent. Payment for vacation, parental, family, medical, or sick leave. Allowance for dismissal or separation, payment for group health care benefits, including premiums. When you're looking at your health care, you want to make sure that's only the company portion, that you do not include any amount that the employees actually pay for. Payment of any retirement benefits. At this point, we're assuming that means the match, that is, the company is matching toward any retirement. We don't have specifics on exactly what that includes when it comes to profit sharing and higher level type payments at this time. And also payment of state or local tax assessed on the compensation of employees, which we believe to be the unemployment for state unemployment tax. What is not included in payroll cost? The compensation of any individual employee or self-employed individual in excess of an annual amount of $100,000. So you're allowed to take up to the $100,000, but you just cannot take above that. And that's also annualized for a certain look back period in some later calculations. Payroll taxes cannot be included outside of that state unemployment tax. And any compensation of an employee whose principal place of residence is outside the U.S., or any qualified sick leave or family medical leave for which a credit is allowed under the new Coronavirus Release Act that was passed last week. So we can't double dip some of these tax credits with the same payroll costs that we're going to include in this loan. What are the terms of these loans? According to the bill, it originally stated the loan will have a maximum maturity of 10 years and an interest rate not to exceed 4%. Per the application that came out late yesterday, it says the maturity is 2 years and has interest at 0.5%. The proceeds may be used to cover payroll, mortgage interest payments, rent, utilities, and any other debt service interest requirements. The standard fees imposed under Section 7 of the Small Business Act are waived, and no personal guarantee is required by the business owner. Some other questions that we have run into: is it possible to defer payments under the loan? An additional provision in the CARES Act provides for possible deferment or of repayment of the loans for a period of at least 6 months, not to exceed a year. I don't think there was anything new in that, was there?
In the SBA regulations last night, it basically said they would defer them for 6 months.
Okay, I couldn't remember. Thank you. How do the loan forgiveness provisions of paycheck protection loans work? A separate section of the CARES Act calls for a portion of the aforementioned paycheck protection loans to be forgiven on a tax-free basis. So the amount that you're going to receive, you do not have to pay federal income taxes on that. Who qualifies for loan forgiveness? Once you have submitted your application, you have to go through an 8-week period, and we have to go through a verification of the number of employees you have, the pay rates that each person was paid, and then you have to prove by canceled check showing any mortgage interest that's paid, rent, utilities, type payments for the 8-week period starting with the date of the loan. So you have to prove to the bank that you have, or the lender, that you have spent the money the way you were required to spend it in order to do the calculation for the forgiveness portion. How much can be forgiven? The amount to be forgiven is the sum of the following payments made by the borrower during the 8-week period beginning on the date of the loan, which are, those are the items listed, the payroll costs, mortgage interest, rent, certain utility payments. So you want to make sure that if you own your own building, for instance, and it's a self-rental and you're paying your other entity rent, you want to make sure you actually have a lease in place that is effective prior to February 15th, 2020, and you want to make sure you're actually making the rent payment. A lot of times with businesses, they want to just make the mortgage payment directly from the operating company to the bank, but you're going to need to show you actually paid rent properly. And per the SBA, due to the likely high subscription, it is anticipated that not more than 25% of the forgiven amount will be for non-payroll cost. So that was in the application that came out yesterday, that just to keep in mind that when they're calculating the forgiveness, it can't be the non-payroll items. So the rent, the mortgage interest, the utility cannot be more than 25% of the forgiven amount. So in terms of how much you're paying out for payroll, you've got to be careful that you're not trying to rely on higher rent or utilities to cover the money that you're spending. By what amount can the forgiveness be potentially reduced? There is a provision that reduces the amount that may be forgiven if the employer either reduces its workforce during the 8-week covered period when compared to other prescribed periods in either 2019 or 2020, or reduces the salary or wages paid to an employee who had earned less than $100,000 in annualized salary by more than 25% during the covered period. So we have a look back period where we have to say, in that 8-week period of the loan, how many full-time equivalent employees did you have and how much did you pay each individual person compared to either February 15th of 2019 through June 30th of 2019, or you can look at January and February of 2020 and compare, which calculation on the full-time equivalents you want to look at and make sure that you don't reduce your workforce during that period. And if you do, then there's a calculation that may not be actually forgiven. Then you have to look individually at your individual employees and make sure you didn't reduce their pay more than 25%. It's common right now that employers are reducing some employees' pay for a period of time just to help out with the business. So we want to make sure that the workforce is back in place, everybody's working again at normal levels, and that the salaries and pay is not reduced from the prior year. There is an exception to this reduction if the employer rehires or increases the employee's pay within that allotted time period. So by June 30th of 2020, as long as you can show that you're back at full capacity, there is some leeway in terms of how that full-time employee calculation works, but you still have to be careful in how the calculation of how much you spent of that money and how you spent it to do the calculation. Do I have to include in income the amount of forgiveness? No, it will be excluded from federal income taxes. How do I apply? The SBA loans are going to go through your local SBA lender. It may be your bank, a credit union. Normally, there's a lot of typical SBA lenders, and with this act, there are more lenders than normal who will be lending this particular SBA loan. What do you need to apply? The SBA has created a new Form 2483 Payroll Protection Program application form, which includes eligibility and certification of the borrower. This was just released yesterday and is on the SBA's website. The banks will be requiring documentation to support the numbers on the form. Each bank may require slightly different documentation. For anybody who's already spoken to their bank, a lot of them have already begun asking for different types of information, and they may have some of their own forms they also want you to complete. When can I apply? According to the application yesterday, the small businesses and sole proprietors can begin applying on April 3rd. And then April 10th, the independent contractors and self-employed individuals can begin applying for these loans.
And I just want to interject, it doesn't say in here where corporations or partnerships, but the banks are saying those are April 3rd.
You will need to provide to your lender a completed application with amounts and information regarding ownership. There is specific required documentation and then certification of your compliance with the 7 key factors that are on that application. It's a very short application form. It won't take long at all to fill it out. When do I request loan forgiveness? After the 8 weeks that ends after the date of the loan, 8 weeks after the end of the loan, that's when you're going to go back to the lender and you will submit the documentation that verifies your full-time employee equivalents, the pay rates, and then your eligible mortgage payment, lease, and utility payments. This is just the top portion of the new Payroll Protection Program application form, just so that you can see what it looks like. And then if one of those boxes at the very top applies to you, then you would mark one of those boxes. Again, it's a very short form, not too complicated, other than being able to calculate your payroll portion that you'll have to do on a separate form to be able to figure out what number goes on that line. How will banks respond? The banks have not had a lot of information. So that's where we hear a lot of different things from different banks and what they're asking for currently and what they're wanting. And I think things will be a lot better today after they got those forms yesterday. And hopefully, the message to the customers will, they'll have their hands around it a little better today, I would like to think. Until this point, they just have been waiting for some kind of information from the SBA and it just had not been there. So hopefully that's coming in play and they're going to be overloaded with loan applications. I think they already are, at least with interest. So I guess just be patient.
I just want to add a couple of things because I've talked to a few bankers even this morning. The banks are going to be overwhelmed. They're all wanting to serve their clients or customers. But if you try to switch banks in the middle of this, you're going to get, frankly, to the bottom of the list. So you really need to stay with your existing bank and hopefully they'll be able to help you. But don't expect to be able to go down the street to a different bank and get this done because they just can't do it. Several banks are working 24/7 to try to be able to do this, and they're going to do their best. Some of the banks are also asking for slightly different information. If they do that, you really need to check with your CPA because some banks have different, actually some banks are asking for incorrect dates of information. So just check with your accountant, make sure you're giving the right information. And we're going to do our best here today to give you the dates that are in the law. But if you do hear something different, there's a lot of confusion. Okay, this is Diane Medley. I'm going to cover the EIDL loan. And I know this is going to get even more confusing because we're going to have some slightly different rules. But basically the EIDL loan is more of a loan for people who are actually having significant cash flow problems because it is a loan. And if you're in a business and you don't want to get a loan, you're really just wanting to take advantage of the forgiveness. There's no forgiveness in this loan. It's a real loan. You do go, it is eligible for small businesses and not-for-profits. This not-for-profit does include all not-for-profits, not just 501c3s, which is the only eligible nonprofit under the Paycheck protection loan. You're eligible for this EIDL loan all the way through December. So if you file for this loan and get certain funds, then you need to go back, you can. There is some confusion around, can you have both loans? You can. The way the law is written, you cannot have two payroll protection loans, but you could have one of each. You could roll an EIDL loan into a paycheck loan, but you don't have to. So that's at least our understanding of this. There is a hard rule, though, that you cannot have any more than 500 employees. If you've got more than 500 employees, unfortunately, you're not going to be able to take advantage of either this loan or the Paycheck Protection Loan. This is somewhat of a repeat here. It's small businesses of any type with a maximum number of 500. That's 500 including full-time and part-time during the covered period. And that covered period is February 15th through June 30th. Cooperatives are also eligible along with ESOPs, nonprofits, and tribal small business concerns. Who can apply for this? It's, again, businesses directly affected, businesses that are having contracts canceled or business not as it was, other businesses indirectly affected. So almost any business can apply for this loan if they need a loan. You do have to have some little stronger criteria. Your credit history is important. SBA will not loan to people with a poor credit history. The repayment does need to be possible, so you will have to do a cash flow probably to show that you can do the repayment. And the businesses that are eligible, they had to be in business on January 31st of 2020. You do not have to have been in business for a whole year, but you do have to be in business on that date. As far as how much can be borrowed, you can borrow up to $2 million, and the interest rates are good. They're 3 3/4 for small business, 2 3/4 for not-for-profits. You can get a term up to 30 years on this fixed rate. As far as what you can do with this money, you can pay fixed debts, payroll and accounts payable, and other bills that you normally would have had money to pay. You cannot use this money to replace lost sales or lost profits, but this loan can keep you in business until you can get back on your feet. The collateral, their loans over $25,000 do require collateral. They like to take real estate as the collateral. They'll take a second or third mortgage on existing real estate. But if you do not have real estate, they will take accounts receivable, equipment, and they will not decline it for lack of collateral. But you do have to pledge what you have. As far as applying for this one, it's all online. They did have a crash of their system, so they started saying they would take paper, but I think they've gone back now to online only. The website is sba.gov. When you start applying for this, you may need your accountant on the phone or with you when you're doing it to help, but you would need copies of your most recent tax returns, typically the last 2 years. They will ask you to fill out certain SBA forms that shows what your historic business income and expenses have been. As far as how much you do obtain through this loan, it's somewhat of a black box because you fill out the forms, you submit it, and then they tell you what they're going to give you as a loan. So there's not a lot of guidance on, are they using a formula? Are they taking certain numbers and using those and not others? It's really sort of a black box method. There are lots of issues occurring with the website, but lately we've heard that it's been better. So hopefully you can get online and get this done. The CARES Act that was passed last Friday and signed into law did make a few changes to this EIDL loan program. The first one, it just cleared up the fact that everyone's affected, everyone's eligible if you meet the other criteria. It did make some other favorable changes that we've listed here. It waived the rules related to personal guarantees for advances and loans of $200,000 or less. It waives the 1 year in business prior to the disaster requirement. It does not require that you have to have gone elsewhere and be turned down for a loan. And it does allow lenders to approve these are the SBA lenders, to approve the applicants in a very quick and hopefully simple way based on credit scores or other methods to determine your ability to repay. The EIDL loan has a special provision that we are recommending very small businesses to take advantage of, where you can get $10,000 as an emergency advance within 3 days. This advance does not have to be repaid even if the loan is later denied. And we've got people who are in the queue on this $10,000. We have not heard of anyone that actually got their check yet.
No, not yet.
But it should be
Any day.
any day, hopefully.
And if you applied like a week ago for this disaster loan, then you need to go back on the website and click this emergency advance. It is a separate application that you have to request this advance. So make sure you log back in and request it so that you'll get the 3 days.
As far as how these monies can be used, it's very similar to what we've discussed prior to this, to be able to maintain payroll, to pay people sick leave if they are off, making sure that you can maintain your supply chain, making rent or mortgage payments, and repaying debts that cannot be paid during this period due to lost revenue. If an entity does receive an emergency advance that we just talked about, or for a loan under this program, and then they also get a Paycheck protection loan, the $10,000 will reduce the amount that can be forgiven. Not the whole loan under this program, but just the $10,000. Here's a quick comparison of the two loans, just as a high-level overview. On the first column, we've got the payroll forgiveness loan. We've got the EIDL loan on the right. As far as qualified businesses, very similar for both loans. Amounts available. The payroll forgiveness loan, there is an exact calculation that we previously discussed, which is 2.5 times the average monthly payroll, up to 10 million. The EIDL loan, as we said, it's up to 2 million, but it's based on the SBA calculation. The interest rate on the payroll forgiveness loan set up to 4% per last night. It's 0.5%. The bankers are saying that may change again before anyone applies because they feel like that was too low. So we'll see how that lands. On the EIDL loans, it's 3 3/4 for for-profit entities and 2 3/4 for nonprofits. As far as collateral and guarantees, the payroll forgiveness loan, there's none. The EIDL loan, there are some collateral requirements and guarantee requirements if you go over certain amounts. As far as repayment, the payroll forgiveness loan, you can defer for 6 to 12 months, and then you have a portion forgiven and then the 10-year term for the balance. Last night they came out and said, basically they're ignoring that and saying 2-year loans. Again, that could change as we speak. On the EIDL loan, you can get up to 30 years with a deferment of up to 12 months. There are affiliated rules. If you've got multiple companies with common ownership, this is the biggest issue we're struggling with right now. If you've got 2 companies and together they're over 500 employees, you probably will not be eligible. The other problem we're running into is if you've got multiple companies, who applies? We're going to need to have you consult with your bank on that. CPAs can assist with giving ownership percentages, but there's a ton of confusion out there on who is actually going to apply for companies that are under common control. Okay, now we're going to go through a very, very simple case study. I'm going to turn this back over to my partner, Diane Kilner.
Okay, this is Sally's Beauty Shop, and We're going to apply for a Paycheck Protection Loan on May 1st. The business had $1.2 million in payroll costs for the period of May 1st, 2019 through May 1st of 2020. That is our 1-year look back based on the date that we are applying for the loan. And the average monthly payroll is $100,000. For the eligibility piece, we're assuming it's made before December 31st of 2020, equal to the lesser of $250,000, which is the $100,000 in average payroll cost times 2.5, or of course the max is $10 million. During the application period, in the first 8 weeks after the business borrows the $250,000, the business will pay $200,000 in payroll costs, mortgage interest, and utility payments. Sally's Beauty Shop is eligible to have $200,000 of the $250,000 loan forgiven, and the forgiveness will not create taxable income because that is the only amount that was spent toward the appropriate expenses during that 8-week period. In addition, because of the deferment rules in the CARES Act, any payments due on the remaining $50,000 will not be due for 6 months. Interest does accrue during the whole period that they have the loan, and it's just that no payments have to be made prior to the 6 months. Some frequently asked questions. Does payroll include independent contractors, which we report on a Form 1099? There's been a lot of question around this, and it's because of how it's worded in the bill and how a lot of different people have interpreted this, including some information we've even seen from the banks in the last few days. What we really believe is that a business will not be able to include their independent contractors because those independent contractors will be able to go out and get their own loan on their own Schedule C type business, their own 1099, their own net profit. And it does not make sense that the government's going to loan the same money for the same expense. So I really don't think that should be included. Do we include employees who make in excess of $100,000? Again, there's been some confusion because of the way the bill was worded. Sometimes I think there should have been some periods in between and some new sentences made, and I think they were in a hurry, and that's where some of these confusing items have come about. But you do get to include up to $100,000, but you must exclude anything above that $100,000. If you lay off 2 people out of 10 total, do you have a 20% reduction in the loan forgiveness? Yes, this part is based on the full-time equivalents when you're comparing how many full-time equivalents you had during that particular period of February 15th of 2019 through June 30th of 2019 compared to where you were during the 8 weeks from the date of the loan. Does having someone refuse to work during this period make a difference in the forgiveness rules? No, there's nothing in the law that will give any sort of exception for any type of termination. Does the 25% pay reduction rule apply to each employee individually, or is it an overall calculation? It is per employee and only applies to the employees making less than $100,000. Basically, the government wants to make sure that the employer isn't just trying to pay themselves and they're not cutting the pay of their employees, and mainly trying to keep employees working at their full pay and full capacity. Okay, which loan is best? We take it that if you don't have employees, then the EIDL loan seems the best way to go because you've got to have payroll to be able to apply for the payroll forgiveness loan. And it also is going to be a lot faster to obtain. So especially for businesses that need fast money, you also have the longer deferral period and a slightly lower interest rate. Of course, we said that before we saw the 0.5% yesterday. Didn't realize that was still in there. That is, I think, still subject to change, but the way it was originally written in the bill, it was a lower percentage. And then you have the ability to get that $10,000 right up front. It will allow you to remain operational and not fall farther behind while your crisis is going on. So we do see a lot of people that are currently shut down, and they're going to go for that disaster loan, the EIDL loan, immediately to help just get through this time. Just hope to keep their doors open and still have a business down the road. If you do have employees, then you definitely want to look at the 7A loan as it being the most potentially beneficial program, because you have the ability to have that forgiveness. First step, you want to contact your bank. You make sure they're aware that you're interested, kind of get on their list, get on their radar. That way they can send you some information of what they're currently requesting and what they're sending to their people. And then there is also a seasonal component. If you do have a seasonal business, there are some different calculations and different time periods that you would look at when you look at that loan, as well as if you just began business in 2020 and did not have that full year, you can also look at a different time period as well. How much can be forgiven? The amount to be forgiven is a sum of the payments made during the 8-week period beginning on the date of the loan. Payroll costs, including gross pay and most benefits excluding payroll taxes, and gross pay in excess of $100,000 annualized will be excluded. The mortgage interest, rent, and certain utility payments. Another note in the application that came out yesterday is that there is the limit of the 75% of forgiven to be related directly to the payroll cost, so that mortgage interest, rent, and utility cannot be more than 25%. What can the forgiveness be reduced by? There is a provision that reduces the amount that may be forgiven if the employer either reduces its workforce during the 8-week covered period when compared to other periods in either 2019 or 2020. This is where you have to look at the period of February 15th of 2019 through June 30th of 2019. You can take your full-time equivalents of that period, compare that to January and February of 2020, and you actually have the option of which period you want to use. Also, you have to look at reductions to salary and wages paid to employees who had earned less than $100,000 in annualized salary by more than 25% during the covered period. They want to make sure that you did not cut your employees' pay, and during that period, you were able to get their pay back up to normal levels. However, this reduction can be avoided in the forgiveness piece if you have rehired or increased the employee's pay within that 8-week time period. In particular, it must be done by June 30th of 2020. That does not mean that you can go rehire your entire workforce on June 30th and say everybody's back to work, because you still have had to have spent the money on the payroll costs and those particular items, not to exceed the 25% for those non-payroll costs, to still get the amount forgiven.
All right, I'm going to jump back in here. Some other insights. You know, if you think about this, the SBA is administering this, but the payroll protection loan is much more than a loan. It's a stimulus for business. And it's very important that we here in the state take advantage of this, because if we don't, it could make a big difference in whether our business is a survivor or not. So it's important that we jump on this, learn about it, get our calculations done, and get with the bank as soon as we can. Also, the banks, as I said before, are very, very on board with helping, but they are in overwhelm mode. So anything you can do to give them information that's accurate up front will be much appreciated and will help you get your loan application through. Our role in the process, and this would be any CPAs, because I know a lot of y'all have other relationships, our role is to assist you in getting this information together, to answer your questions, and give you expert guidance in how to maximize your benefits. We have spent hours as a firm studying this, so we're hoping that clients will ask us the questions so they don't spin their wheels and run off in the direction of frustration, because we want to really get them in the queue and get their money as soon as possible. Some of the planning opportunities that you need to think through. The form is very simple, but the background is not. And what you're going after, the plan, is not simple. When do you want to make the loan effective? People would say, well, why not as soon as possible? Well, if your workforce is not in place, you're not going to have enough payroll cost to get a big forgiveness number. But if you could get your workforce back and have them in place for an 8-week period, you will maximize that benefit. So what we've told people in our situations is possibly get the EIDL loan first to get your workforce back, and then go for the payroll protection loan once you've got those people in place. But every situation is different, so you really need to speak with your advisor on what they would recommend. There are some other issues. There were 2 or 3 bills, I think 3 bills altogether, that were passed in the last 2 or 3 weeks. Some of them have different benefits. There's a family and medical leave benefit. There are payroll credits and deferrals. If you're getting a credit or planning to get a credit for certain family and medical leave expenses, those payroll dollars will not count towards the payroll protection loan. So you have to be careful to make sure you're taking advantage of the most advantageous law, not just the one that's just passed. Planning for when to do employee terminations, furloughs, rehires, or compensation reductions. Very important in this law, because you can get dinged for reducing payroll by certain amounts. If your terminations are at certain times, it could count against you. So you need to think through what are your planned terminations, furloughs, rehires, and reductions at the same time. Determining the exact amount included in payroll cost. You don't want to apply for this payroll protection loan and leave things on the table. So you need to make sure you're including everything in the law that is allowed. There's other complicating factor is who would be the filing entity if you've got multiple controlled companies. Very, very important that you make sure you maximize your benefits across all companies. And then how to avoid the loan forgiveness reductions. We've gone through a couple of examples there, but you really have to look at your workforce on a person-by-person basis to make sure you're not leaving anything on the table. We do have some clients who have more than 500 employees. So what happens with them? Unfortunately, these programs we've talked about are not available for them. But in the law, there were some statements saying that the Treasury Secretary is instructed to endeavor to establish a program to help these mid-sized businesses. They even stated in there the loans would be less than 2% and deferrals for 6 months. And there are certain certifications regarding retention, pay, benefits. There is a guarantee not to send jobs offshore, to abide by collective bargaining agreements, and to not interfere with union organizing efforts. If you all heard some of the stuff that was going on late last week, this sounds like some of the discussions that were going on negotiating between the two parties. But right now, there is no guidance on how these loans are going to be administered or anything particular. We are awaiting guidance from the lenders on some of these questions. We did insert here in red some things became somewhat more clear last night. There was question about would you be able to include 1099s in your payroll? Based on the guidance that came out last night, they are not included. Treatment of payroll withholdings. There's some weird language in the law that acts like you actually reduce payroll by federal and FICA withholdings, which did not make any sense to us. So in the guidance last night, there was no reduction prescribed, so that was good. Treatment of partners, they are included in the application as other self-employed, so we feel good about those people being included up to the 100,000. But these last 5 items or 4 items, no guidance has come out on them. But I want to alert you to the fact that you need to discuss this with your attorney, your banker, and or your accountant. And those are, if you've got common paymaster where one company's paying payroll for multiple companies, how do you treat that? What if you have temporary employees under a third-party contract and that's a normal part of your business? Do you include those or not? Our thought is you would, but you need to speak with your banker about that. Let's go back here. Treatment of terminated employees under the payroll protection loans. It looks like the way the bill is worded, and there's only one very, very small paragraph. If you terminate employees now, there's no way to mitigate that because it's an employee by employee calculation. So that would be a reduction of how much you could get forgiven. But we don't feel like that's what was intended entirely, so there may be some guidance to come out on that one. The other question is if you're a 501c6 or 7, but you have an existing 501c3, can you somehow take advantage of the payroll protection loan? Because 501c3s can do that. There's no guidance on that particular question. Okay, what are our recommendations to help you all get your calculations done as soon as possible? Just to reiterate, it's not simple because you want to make sure you don't leave anything on the table. There are a lot of interrelationships between the various laws that have recently passed. There are many options for employment decisions that should not be taken lightly. The application process should be coordinated with your certification that's going to happen 8 weeks later. So in other words, you're going to apply for a loan now, and 8 weeks later, or 8 weeks after you get your money, you will be certifying certain expenses. Just make sure you understand what that certification is going to involve. And the hurried drafting of the bills leaves many items subject to professional judgment. So if you get frustrated because someone cannot give you a definitive answer, that's the best we can do because there's not a lot of definitive guidance. And I don't want to overstate this, but this decision about taking advantage of these loans could be one of the most important decisions you make this year to make sure your business is healthy when we all get through this crisis. We've listed here what we're doing for our clients, and I'm sure your CPAs out there will be doing much the same, but just to give you a feel for this, we're prepared to take the time necessary right now to address your questions. We have templates ready to go to show what if scenarios so that you can make good decisions. And you need to make sure you've got multidisciplinary professionals who can address your employment questions, your tax questions, and your financing questions together. If you want to contact us, we will have an email available where we're answering questions for clients and non-clients as quickly as we can. I don't know if that's on here or not, but we'll make sure we get that to you if your current CPA is inundated with tax season or cannot get you the answer. Okay, that's the end of our standard presentation.
Can we go back to see?
Let's see about, Travis, do you want to get on here and give us the questions that have come through, or we can go with the questions right here?
Sure, there's a lot of questions so far in the sidebar. I don't know.
Can we pull that up?
If you can see those, you'll see the little chat icon at the bottom of your screen.
We just need to pull it back to unshare our screen and just go to the, like where we first logged in.
Sure, yes. One of the questions I'm seeing is, let's see, they're starting to come in a little more. Are small businesses classified as essential still eligible for the PPP?
Absolutely. You know, in a sense, everybody has been damaged by this, whether, you know, directly or indirectly. So businesses that are open and operating, you know, you're still going to have challenges, whether it's with your suppliers, with your customers, with your employees. So absolutely, if you're able to apply.
Can a sole proprietor utilize the payroll protection program if they have no employees but need to pay themselves lost revenue? If so, what amount can be used to calculate this?
You're not allowed to apply for loss of revenue. What we're waiting to hear about has to do with exactly how sole proprietors, you know, what can be covered, if anything can be covered. Do you have to show, you know, what do you show for any forgiveness? Those are things that are not real clear, but definitely sole proprietors can apply. It's just we don't know how yet. We have a similar question when it comes to the partnerships. We've had the question many times of, do the partners' draws count as the amount? Do the guaranteed payments count as the amount? And again, you know, we believe that the K-1, as long as it's subject to self-employment tax, up to the $100,000 will apply, but we don't really have any definitive guidance on that at this time.
I'll just interject here. If you're a sole proprietor and it's just you, the way that it's going to work, you'll only get about $15,000 worth of benefit from this, because it's only 8 weeks worth of your earnings on an annualized basis, no more than 100,000. So we don't believe it's worth the effort to get in line for the payroll protection if all you have is yourself.
And what I would encourage a self-employed person to do is to go and apply for the unemployment benefits that are available. And with the new law that passed last Friday, they've also added the $600 a week, you know, per person on their unemployment. So you may be in better shape because that portion lasts 4 months. I think you may be better off to go for the longer term as a self-employed person than this loan.
And also you can go on the EIDL loan and get the $10,000 as a self-employed person.
Yes, and it will also be up to what your expenses are. I've talked to a couple of people who work out of their homes and they don't really have any direct expenses. So you'll have to see what expenses you have that you can include when it comes to, you know, what you're going to be eligible for.
Will the payroll protection loan be available to farmers?
Yes. I don't see any reason not to. Especially if they have employees.
Does a business qualify for the loan if it is currently closed by state mandate?
Yes, absolutely. And that's where you have to consider, do you need the cash kind of faster and you want to go for the disaster loan to help you pay immediate bills, immediate needs, rent, utilities, you know, to keep the lights on and the doors in existence. Or there's also cases where they'll go ahead and take the payroll protection loan knowing they can bring their employees back sooner, hopefully. The thing is, you've got to spend the money. So it may be that you want to wait a month till we, you know, figure things out. So timing of that is critical. Otherwise, it just turns into a loan. but you've got to spend it on payroll. So in some cases, I've seen people say, well, I'm going to bring them in and do some things, you know, around the business that they've wanted to do for a while, even though the actual, you know, business itself is closed. But if all you're doing is borrowing money to give back to the employees, then you have to decide, is it a benefit for you to go through the whole process to turn around and pay it to the employees versus leaving them home on unemployment? So you just have to weigh that by your individual case.
Are foreign-owned businesses eligible if all employees are U.S. citizens and all facilities and operations are located in the U.S.?
We believe they are, because the only prohibition is for employees who are working outside the U.S., not for businesses outside the U.S.
If a 509(c)(3) organization has subsidiary companies with the parent doing the payroll for all companies, can each of the separately licensed companies be entitled to apply for a PPP loan?
I'll repeat that again.
Sure. If a 509(c)(3) organization has subsidiary companies with the parent doing the payroll for all companies, can each of the separately licensed companies be entitled to apply for a PPP loan?
This is where we were saying that we're having some challenges being able to answer that. For that client, I would have them contact their bank, explain the situation, and ask for their advice on who should file and how they should go about documenting payroll. Because under the payroll protection, only a 501(c)(3) is eligible. So that's a little bit beyond the scope of this session. But what we're telling people is we're going to have to get the banks involved with that question.
And I think the other part of that makes it tricky is when you've got one entity paying all the payroll, they're going to be going based on those payroll reports, tax return, you know, the payroll tax returns. So that's where it seems like it would be at the level that's filing those returns. But again, you know, we're not positive because that's not been told yet.
Do we include employers' compensations up to 100K, of course, in our payroll calculations?
Yes, if they're on a W-2, then that's just part of regular payroll up to the $100,000.
And if they're not, if they're self-employed, it's also up to 100.
Right.
Either one.
Right.
So if an employer has a defined benefit pension plan, the payroll loans may not be able to be used for making required contributions, but maybe the proceeds from the EIDL loan could be used for required contributions?
Yes, we believe that a portion, the payroll protection loan will cover a portion of those defined benefit expenses, knowing that they probably won't be paid during that period, but at least they will be effective. But it's only for 8 weeks. So if you're needing more payments over and above the 8 weeks, the EIDL loan would help you with that.
Can you provide any guidance on the payroll protection loan use of 1099 independent contractors in the loan calculation portion?
We don't believe that you include it as part of your payroll if you're giving people 1099s. And that was not necessarily validated last night, but nothing in the guidance listed where you're going to be providing 1099 numbers. So we're assuming that those 1099 businesses would report and get loans on their own, but you could not count them in your numbers.
Previously said, oh, sorry.
I was just saying that's been a real point of confusion. But again, based on last night, we don't think it's included.
Okay. Previously said verification of funds use needed to be checks. Will electronic payment proof of a bill be accepted?
Probably.
Are there exclusions for nonprofits who receive Medicaid funding for EIDL or PPP?
There was no mention of it in the law, so not that we know of.
Regarding the SBA 7A loan, does the calculation for eligible funds include only full-time employees? Does part-time employees not working affect the amount forgiven?
Absolutely. You have to do a calculation of full-time equivalents. So if you have 2 people working 20 hours a week, excuse me, that would turn into 1 full-time person. So yes, you have to do those calculations.
And their pay, all pay is included, full or part-time.
Do you think funds will really run out? Will probably be at least 8 weeks or more before most can even open who have forward-facing businesses, as the peak is not predicted until mid-April or mid-May. If we got it in 2 weeks, we probably won't even be able to open at that point.
That's a really good question. The timing of all this is very difficult. All we know is that the law says that the 8 weeks starts when the funds are dispersed. So you probably could speak with your bank about making sure that that timing is not just whenever, that you could maybe have some control over go ahead and get the loan, get it approved, and maybe ask for disbursement May 1st. Might be safer, but we don't know if that's doable or not, but at least that would be a question I would ask.
Keeping employees on unemployment to determine when to start the 8-week period, are you only raising your unemployment ratio rate?
Correct. It's definitely something people have to take into consideration. And as soon as you get the money, you've definitely got to bring them back to get your numbers back up, get the payroll paid out properly on payroll. The longer you leave them on unemployment, you're also going to increase your unemployment rate, for the coming year as well. And that's not something anybody wants to think about right now, but I mean, realistically, they're all going up. So
this law was designed to try to keep people off unemployment and keep them in the businesses. But the issue is, like the prior question, is if your business is shut down, it's a restaurant or hair salon, etc., other than bringing them in to do some renovation or do some busy work, I don't know what you do.
And I've seen that. I've got some clients that are closed and they're doing some of those kind of cleanup things, doing some filing, rearranging shops, and doing some work that they've wanted to do and not have to shut down that optometry office, and they're cleaning things up and fixing them up. So they're taking advantage of that in a sense.
Of course, right now the governor has us under a do not go to work unless it's essential order. So hopefully this will be lessened soon.
If you have a company that has a payroll of 100,000, for example, in January 2020 until February 2020, which would be 250 100 or 1,000 loan, do you have to apply for the full 250,000 or portion available?
That's actually one of our questions we have. I've been over this same question multiple times with clients who they know they can't get their full workforce back in place. They know they can't be fully operational, and they'd like to do their own calculation of, this is what I think I'll be paying out. This is what I think I would be able to cover and get that amount forgiven. But at this time, we don't know whether or not, will the amount they actually borrow be the percentage that gets hit, or will they take into account what they could have borrowed? So until you have that discussion, I certainly, can't answer that question. You definitely want to know before you take the money, because it may be that you should take the full amount and then pay back the portion that you don't need, so that the actual amount you spent doesn't get reduced. But that's one of our top items.
What if you are leasing employees through a payroll company? Their EIN is under the payroll company, but they work for your business. Can you use these funds for this payroll?
We think they can. We think they can, just based on how the control of those employees works. But again, it's one of those questions of, well, we don't have 941 tax returns or unemployment tax returns to turn in. So it is still a question. It's just a discussion with the bank of how you include them.
How will independent contractors calculate forgiveness of the PPL?
Well, it's definitely a question that we have because there's not any guidance on it, and that's why we're concerned that if you don't have employees, it's going to be hard to do that. But again, there's no guidance at this time.
As an owner, if you take part of your income on a W-2 and take dividends for additional, can you include any of the dividend income?
No, you cannot include the amount that's a dividend because a lot of this has to do with self-employment tax, the payroll taxes that you're paying in, the Social Security and Medicare portion, which is why like a partner on a K-1 can only include self-employment income, and those dividends are not self-employment income.
Can you go back over and define all that can be included in payroll cost?
Go back over that.
Yes.
Okay, it's your gross pay, including any leave pay, vacation pay, or even severance pay. It also includes health benefits that the company pays. That would be health insurance, vision insurance, and dental insurance. It includes retirement benefits. In that case, if you're doing a match or if you're doing a profit sharing, I would prorate the numbers based on the periods used. It also includes unemployment compensation payments, the tax that you pay the state. Those are the items included in payroll. If you're a sole proprietor or a partner, you can also include your own income up to the $100,000. We also think you as a sole proprietor or partner can include your health benefits and your retirement benefits, as long as those are part of a company plan.
Question 7 of the SBA application for the PPP loan seems to exclude all businesses owned at least 20% for foreign businesses. How do we handle this question if foreign businesses are not excluded?
Okay, let's hold that question. Let me look at the application. Let's go to the next question.
Okay. And we are, and I see this in our chat box, for those of you who are on today, we are recording the presentation. If you have commission only reps, do you average their previous income and pay them though they can't get out to make new sales?
Well, you have to take that defined period of what is on the payroll, what's on the W-2s. I mean, that's just how the calculation works. And then if they're not able to work and you're not able to pay them, then that amount's not going to be forgiven. That's just part of the consideration of, do you want a loan or do you want the forgiveness? It's got to be spent on payroll. 75% of it has to be spent on payroll, or you can't have it forgiven.
Are there going to be any early prepayment penalties if you are lucky enough to be able to do this?
No, there are not any prepayment penalties. So I think a lot of people, the intention is to get the money, hopefully have it all forgiven, and if it's not, then just pay it back, whatever's left over at the end.
What exact guidance are you referring to that came out last night on 1099 payments not being counted as wages?
They're not requesting any 1099s on the form. They specifically just want the payroll records.
Are benefits paid to unions eligible to include in the calculation?
Not unless it's going to be specifically listed as health insurance, because only health insurance is allowed, or retirement. But yeah, those two have to be specifically set aside. It can't be called something else, because you also have to turn in the bill that's going to show that you paid health insurance or your retirement calculation.
If businesses are not able to return to normal hours by June, do you anticipate an extension for the requirement for forgiveness?
We have no idea how this is going to play itself out. And if there's some discussion that if the money runs out, what will happen? Will it more be appropriated? I think it's going to depend on our legislators and how much pain they feel through our calls and letters. On the question back to foreign, we're not seeing that on the application. It does ask for ownership, and if you do have a foreign owner, you would need to put that on the application. But I haven't seen any restrictions on foreign owners.
And the specific form we're speaking of is the Payroll Protection Program application form. And it's an SBA form 2483 that just came out yesterday. I know a lot of, excuse me, a lot of the banks have been sending out the long SBA forms, the normal program forms, and that is not the correct form, just in case that's what's being looked at.
A question a little bit earlier. My employees are paid a bonus, which last year made up 50% of their pay. We are completely shut down per regulation, so I don't see us getting back up to last year's level. Perhaps this year at all. I guess this will only affect the total amount we can ask for forgiveness on.
That's correct. You know, we're spending a lot of time talking about forgiveness, but right now these loans are 0.5%, 0.5%. And you can get these loans based on the last 12 months. So I think I would recommend maximize your loan at that low of an interest rate. It can give you a lot of flexibility going forward on how you manage your business.
I agree.
Thank you. We'll just keep going. We've got a few more minutes. We're in an industry with very high turnover. Is the comparison looking at employee John Doe's wages to John Doe's wages in the 8-week period? Or is it looking at the FTE numbers and not person specific?
Okay, there's two tests. One is FTE, which I think you'll be fine on. We have a big concern about the reduction provision. It's a very, very small paragraph, and it says it's specific to the employee. We don't feel like that's what they intended, so that may be clarified. But at this point, that's part of the forgiveness piece. Go ahead and get your loan in place. And then, as they say, let's worry about that as the next step. And hopefully that sort of bad rule will go away. Because there's, if someone...
It makes sense. I mean, I try to use logic on things sometimes, and, I know I can't do that with all tax law, but it just doesn't make sense that you're going to get penalized because you replace the person. I mean, the point is you're back up to your full staffing level and paying them the correct amount. That's the goal of this money. So I don't think you're going to be penalized, but it is not written at this time.
There was a footnote on one slide that said some agriculture businesses were excluded or limited. Could you expand on that?
I believe that's on the EIDL loan.
Bear with us, we're trying to find it here.
While you're all looking for that, and
yes, it's on the EIDL loan. It said that some agricultural enterprises, religious organizations, and some charitable organizations, gambling concerns, real estate developers, and casinos, racetracks are ineligible. But I don't believe we have any guidance on, and that there was some questions submitted about churches. Churches may be able to get payroll protection loans. But under this EIDL loan, because it's an SBA process, I believe you're gonna need to call the SBA and get that clarified.
And I think especially for the EIDL loan, it's all done online and you just have to go through a lot of check boxes. So, you know, if you're unsure, then I think it's worth going through the process and seeing what the questions exactly are and seeing how you can answer them, you know, to figure out if you can apply or not. They also are going to want tax returns uploaded, and it may depend on some industries and how things are marked on tax returns as well. But, you know, it doesn't hurt to at least check the questions on the form and see if you can get through the process.
Great, thank you all. What kind of fees are being charged for any of these loans?
There's not any fees on the loans. Normally SBA, you know, loans do have a lot of fees, but these do not have any fees.
But if you have a professional that assists you, of course, they're gonna have to charge you a fee.
Are foreign owner and affiliated foreign companies included in the headcount to determine if you are a small business?
I would think so.
Yeah, you're gonna have to look at the affiliation rules and common control. All that stuff is gonna come into play. So yes, if you are a small entity here and you're controlled by a large company, you know, over 500 employees out of the country, definitely is gonna be a problem.
Since the questions are 100% guaranteed by the SBA, what is the risk to the lender?
I don't think there is a risk. But the problem with these loans, if you talk to the banks, is they're very cheap. So there's not any room for banks to pay their people to administer them. So that was some of the bank issues that came out last night on a 0.5% loan. The banks are in a major uproar. So that's why the banker this morning told me that may be changing again.
Well, and some of these banks are talking about it's such a short amount of time that a lot of people are going to want to process these loans that, you know, how are they going to bring extra people in to even deal with all the paperwork and the processing? So, you know, they're in a bind as well, trying to deal with all the paperwork.
Regarding foreign owned, the form asks for business TIN and the I am a U.S. citizen. Would we use the U.S. TIN, and how should we check citizenship as owned by a foreign company?
There's a question that says, I'm a lawful permanent resident. I would probably go with that.
Okay.
But again, we're guessing. These forms are not.
And this form is going to the bank. So it's a matter of, you know, you can fill out the best that you can, and then you have a conversation with the bank because they've got to figure out how to get everything entered and whether or not it works as well.
And can you again share the website for the forms to be completed and a good helpline?
A good.
Did you say helpline?
Okay.
Helpline, yes.
Okay. Go ahead and get the SBA.
Is it just SBA.gov? I think it's, hang on, it's SBA.gov. Bear with me. When you go on the SBA.gov website, then you know you'll see a great big thing about small business resources, and you'll be able to click on those and see the different kind of loans that are available that we talked about today. Once you go into the disaster loan, you'll see the emergency, you know, the $10,000 emergency advance. You'll see that on there. You'll see the Paycheck Protection Program on here. And I know there's a phone number on their website too, because I've had clients who had trouble online when it was down so much last week. But the SBA will have like a 1-800 number on this as well.
Now, the number or we've got a help desk that we set up, and the the email for that is COVID Bank at COVIDBANK at MCMCPA.com. So again, that's COVIDBANK at MCMCPA.com. And we're attempting to answer questions for clients and non-clients.
Wow.
Yes, we don't have a.
Well, thank you all. That's extremely helpful, and your expertise certainly extremely valuable. We appreciate you doing this for the Chamber and for all of the businesses that have tuned in today. We want you all to be successful. We want everyone to be able to take advantage of this as much as possible. With that, are there any closing thoughts, Diane, that you'd like to share?
I think we covered a lot, and you all asked a lot of good questions. Just want to give you all some last thoughts. Just stay positive. The economy of the state is very dependent on businesses like each of you and us, and we need to support each other. You know, I know if we owe each other money, we need to pay each other and keep everyone afloat. We do have our website on this last slide, so you can see if you have questions. We have some more information on our website, and there's our help desk is buried in there. So if you want to ask us a question, we'll try to answer it, and we'll try to help people as much as we can through this unusual and hopefully non-repeated time. But thanks, Travis, for everything you all are doing at the Kentucky Chamber, and keep up the good work.
Well, thank you. And again, we can't express our appreciation enough for you all taking the time to do this today for businesses across the state. And like they said, everyone stay positive. You can also visit KYChamber.com if you need anything on our end. With that, we'll go ahead and end the webinar. Thank you all. Have a great day. And we appreciate each and every one of you.